All right, so let's go over key areas, the ones that we're specifically looking for, why they're important, and how to correctly find and map them on your charts. So you're only going to be using two time frames when you trade. So in this case, we're going to go over the 15-minute first, and then we're going to go over the 10-minute for order blocks. So for the 15, you're looking for your support levels and your resistance levels. And the most common reason why these levels are plotted in wrong is because they're not clean. All we're looking for is clean levels. Okay, we're not looking to get our support levels from all or resistance levels from all this consolidation with price, running through it, over it and under it, and just it's called disrespecting the level when that happens. And so we want the level to be clean. We want to look at the level and really just see clarity. We want to see price touch, have a move away. Touch, have a move away. Touch, have a move away, okay? It doesn't have to touch 3 times. It doesn't have to touch 2 times, 10 times. It can touch as many times as it wants to. So like right here, when this broke, then this would be mapped in as a key area for a potential retest of this area. So it has retested it. It has acted once as resistance, then it's acted again as now as support, and then had a push and a move away, and somewhat of a dramatic move away as well. And so as it comes back down, we want to know when price gets to this level because there could potentially be a turnaround, and it looks like there was somewhat of a turnaround. Okay, and it's the exact same with this level. Price came up, hit right here, had a pull, hit, and then broke through, came back, retested it with a dramatic move away, and then when price comes back down, we want to be able to say, hey, listen, I want to get a little alert when price comes down here because there may be a potential trade. Okay, mapping in these areas, it's not rocket science. It's very simple, very easy. The obvious levels are the ones that you're going to want to go with. So when I was, let's see, where were we? We were yesterday evening. This is what it looked like right here. And I actually didn't even have this level, these two levels mapped in because price was right here. It was in a consolidation phase. And so we've got this area where it came down, tested, came down again, tested. And then we've got this area where it found its top and it just couldn't seem to break through. And so I wanted to map this area out because as soon as price broke through it, there was a chance that this could act as support as price came back. And in fact, it did act as support when price came back. So then it found its top. That's plotted in right there because price may come up there and find some resistance. And it looks like it did find resistance for a moment, and that's actually the trade that I executed. I took partials off right around this area right here, and then as price came up here, I was still actually stop loss right there, take profit right there. And then when it came back down here and started to move up, I went to full stop loss. So full break even. So this hit me at full break even, and then we took off partials right around here as the trade was going. That's how this trade was managed. Now we'll get into management in the management section, and you'll have different options that you can choose from. So let's go a little bit further back for the key areas. Okay, so right here, you can map out this area. Let's actually do it on the replay because it'll make a little bit more sense. So price comes up right here, marking that key area in, and then marking where it came from right here. And look how it's kind of consolidated around this key area, had a push away, then had a dramatic move away. So that's an area that we want to say, hey, I want to know what's up with price when it gets there. Okay, comes right here, falls through. We could also have this level. These are called our swing lows when it's the lowest price point on your screen. And this is your swing high, the highest price point on your screen. Everything in between is still completely valid, but we only want to mark out the levels that are very, very obvious to us, okay? So here's a level that is obvious, and I can actually put it back here because price comes down here, hesitates, drops, retests, has a move away, and then breaks, retests, has a dramatic move away. Okay, at first, our level would have just looked something, and I want you to keep in mind, this is an area, okay? This is not to, to the pipette right here, like, oh, this is our area right here. I used to trade with a guy, and he liked to do his areas exactly like this. And I think that there's a lot more validity in having your area be a space, because price isn't always going to come back to, the very exact point of the previous resistance or support. So you've got to give it a little bit of wiggle room, give it a little bit of breathing room. So something like this. Then when this was created right here, then it would make logical sense to just kind of reposition the level a little bit. Say, hey, still taking this into account right here, but it looks like prices moved up, but we're still within this range. So it's okay to slightly adjust your levels as they go. Right here, hanging out at the top of this, looks like it had some wick action up here. So this is going to be an area. Now I'm not going to pull it all the way up to the wicks because that's a pretty big area, but I'm going to give it a little bit of breathing room to kind of work itself out. And we'll just go to real time here. The thing to keep in mind with support and resistance is we don't want to get too close. We don't want to get in the muddled action. This is what I call muddled action of price right here, where price is just, it's very, very consolidating. And if you look at the market, this is what you'll see. You'll see some form of consolidation. Now, it doesn't mean that there's not a place to trade in here. For instance, we could trade this, okay? For instance, we could trade this, and then we could trade this. But just to understand how the market moves, we're looking at some form of consolidation and then a move away. Okay, that's how the market is going to move. Some form of consolidation and then a move away. A little consolidation, move away. Consolidation, move. A little consolidation, move. Okay, we don't know how long the consolidation is going to last. We don't know how big it's going to be. We don't know how big the move away is going to be either. But if you can just kind of look at your chart and understand, okay, there's basically two things that the market's doing. It's going through periods of consolidation and having a move. Consolidation, having a move. Little consolidation, move. Little consolidation, move. And, some of these are very, very small. I mean, I normally wouldn't even call this consolidation because it's really just coming down and then jetting off. But just to differentiate, just to kind of get a picture and a visual of how the market moves, this would be more of the consolidation that I would say, oh, look at it, it's consolidating. But if we just take into account how it moves, it's basically waiting and then moving. It's basically kind of charging and then exploding into the move. Okay, so just over and over and over again. It's like right here, consolidating, move. Little consolidation, move. Consolidating, move. Okay, I know that consolidation is generally more along the lines of, let's see, where did we go? We saw that example. This is really consolidating. This is really consolidating. But just so you understand, that is how the market moves. Now, let's jump over to another pair. How about this one right here? Okay, and let's just kind of look at the exact same thing. So, plot in that area as our swing low right there. We want to know what's up when price comes back to that area. Right here, remember, it's an area, okay? We can stretch it a little bit because we're not getting in these trades blindly. We're not just buying on a touch. We're not putting a massive amount of weight on these support and resistance levels. We're not saying things like, oh, this is a massive support and resistance level. Like, look at this sucker. Like, it's been, rejected. It's seen like, 5 different rejections and all this stuff. We're not going to do that because no matter what, okay, no matter what level we're using for support and resistance, we're dropping down to validate our trade. So price action is going to tell us, hey, is this a valid level of support or resistance or not? We're not going to use the whole, hey, this has been respected, X amount of times, and so for that reason, we're just going to buy when price comes to here or sell when price comes to here. We're not going to do that, and that's going to save our asses so many times. How many times have you seen a, let's say, support level where it's been respected so many times and you've just put so much weight on it, man? You've said, hey, this is the God level. Nothing can get through here. Nothing can break this. This is solid, impenetrable. And then you've gotten in and it's just fallen through and you've lost the trade. Okay, that kind of stuff happens when we put too much of a bias on these support and resistance levels. We just need to leave it as we're looking for the cleanest areas to plot in. If it's not clean, we're not going to trade it. We're not going to plot it. We're not going to force anything to happen. We're not going to make the market do something or bend it, to our will. Instead, we're going to wait for the cleanest areas, and then once price approaches them, we're going to validate price, okay? And you're going to learn how to do that. So let's plot in some levels. So we've got that one. Also, I'll show you kind of a little trick here. You can take this area and just kind of line it up where you can move it up, and when you see a nice clean area without too much price running through it and things like that, then you can just go ahead and plot it in. Okay. So, that would be a level. Then once price broke, then it would be a retest level. And then once price runs through it like this, and then comes back, we want to be a little bit cautious because at that point, it's been disrespected, and that's okay because usually when price will break through a level like this and it's still going to be respected, it will retest it. But there was no form of retest. It literally dropped through the level and then just came right back. So that's a pretty blatant disrespecting of the level. But as you can see, there's still trading opportunities that come. There's this one, there's this one. There's a break and there's a retest there. There's this one where it's acting as resistance. And then, even further down the line, there's this one. So it's not that the level's trash after this happens. It's that we just need to keep an eye on it and be like, okay, so, it has been disrespected here. We want to see kind of what happens. We don't want to just say, okay, price action's telling me to get in here. Well, it's been disrespected, so let's give it a minute. Let's step back. Let's see what happens. Let's see if it's respected again, and then we can look at taking a trade. Okay, you just kind of want to think outside the box. Use your knowledge, use your common sense with that sort of stuff. Again, I'm going to say it again and again. This isn't rocket science. This is very, very simple stuff. When you first started trading, some of you guys, a lot of you probably started off better, and then the more you learned, well, you probably started off, then you learned some, you got better, and then you just hit this point where you just crammed so much in your head that you just became worse. And it didn't even make sense, right? Because how does that make sense? Learning more makes you worse. But that's the thing. You get to this point, you think that everything's going well. Then you start to make all these screw ups. You don't understand what's going on. You start strategy hopping. You're back and forth, left and right. You're more confused than you used to be. Then you have a little breakthrough and you think that you're onto something. Your hopes are high. all of a sudden everything drops out the bottom and you're back to square one. You don't know what the hell you're doing. And the reason I can break it down like that is because I've been through it, man. Multiple times I've been through it. So let's just keep it simple, because if it's not simple, we can't repeat it and we cannot replicate it. And if we can't replicate it and repeat it easily, I'm talking easily, okay? Every single week we got to do this again and again and again. Then it's just not going to work in the long term. It's not going to be a viable option. Okay, here we've got a level. See how obvious these levels are right here? It's like price came down, hesitated, tried to push off, didn't. It broke through, price came back, retested, had a dramatic move away, slowly walked itself up like this, and then what happened? Oh, I'm sorry. This is actually this level. This is actually a potential order block trade right there. So walked up, actually really close to the level. Let's see where these wicks go. Yeah, that's pretty darn close. That could be a potential trade. And then walked up again, move away, walked up again, dramatic move away. Some of these, I don't want you to get confused, because some of these are order block levels like this one right here, but just focusing, let's go to a different chart that maybe just has some, doesn't really have order block levels on it. And I don't think that this one does. Let's go to our 15. Okay. Now, usually I would not scroll this far back to grab a level, okay? So let's see what the time frame is on this. So, I wouldn't scroll almost 2 weeks back to grab a level, but I was curious. I'm always curious. I'm always looking for ways to simplify and all that stuff. And so I wanted to plot in the level. But usually, if price doesn't have a level like right here, then I'm not plotting it in. I'm just going with price, plotting the high. In this case, we can see that there's a break and a retest, and then we'll see where it goes from there. So right here we have a level, okay? As you can see, very obvious. Price touches, dramatic move away, touches, dramatic move away, tests, tests, and then tests, finally breaking this area. And we've got a very obvious level right here where price has a pullback, dramatic move away, comes back up, potential trading opportunity, then finally breaks above, comes back and retests. Some of the retests can be very extremely clean. Others can be a little bit messy where there's wick coming down and things like that. And again, we're not buying on a touch. We're going to wait for validation. Move away. And let's see here. Nope, that level's just, I was just sitting here to see if this could be a potential level, and it just looks a little bit messy to me. It needs to look really, really clean. There's no other way to really say it except for you just have to choose the levels that are obvious to you, okay? So look at all the levels that we have in here. I mean, we've got potential trading opportunities. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, there's probably about 10 potential trading opportunities just here on this chart from here to here, and we're looking at 6 days. Okay, 6 days, one pair, about 10 trading opportunities. Now, you're not going to get all those opportunities and capitalize on them. Sometimes price action is not going to give you a valid entry. Other times you're not going to be in front of the chart and trading at the time when price makes its move to the certain key area. And that's okay, because you don't need all these trades. I mean, some of the best weeks I've only traded on Sunday. And then after that, sometimes I haven't even taken a trade for the rest of the week. So this kind of stuff, don't worry about that for now. Just start thinking about your key areas and mapping them out. So we want to go with the most obvious levels that are happening. So this level right here, not a great level to plot in, okay? Price kind of ran through it right here already. Then price just muddled around right here, finally came for a retest after breaking and pushed away, but then disrespected it right there. Wick ran straight through it to this other level. So this right there, it's just not a clean, not a clear level, okay? This one is more clean. Price is respecting it right there, respecting it right there, okay? Drops below, and instead of testing it, breaks back up. So, you know, we don't really like to see a lot of that happen. But look, once it breaks above, respects it, okay? We can take it back into account, respects it, and then has this dramatic move away. Let's see. Let's see right here. Levels like this, you want to stay away from this stuff, okay? Where it's just running through price, it's not respecting price, not respecting price. You don't want to trade it. You don't need to force these opportunities, because if you do, you're oftentimes, it's just going to be a pain in the ass to manage the trade. It's going to be a headache. It's going to be giving you false signals. You just want to go with the most obvious levels that you can absolutely just very, very easily see. Okay, right here, price comes up, hesitates a little bit, breaks through with a momentum candle, comes back, retests, dramatic move away. Plot it in, and look where price came back to. It's just the same thing over and over and over again. Let's go to another chart. Okay, let's go to this one. Okay, so I plotted these out, and I pimp my charts basically. You guys remember that show Pimp Your Ride that used to be on back in like the, I don't know, the 2010s, mid 2000s, something like that. Well, this is Pimp My Charts, baby. Okay, so and notice, aside from pimping my charts right here, we're not using anything crazy. We're literally using a horizontal line, and you guys have seen, a couple other lines, a couple other trend line looking things on the chart. That's about it. So we want to keep it clean. We want to keep it simple. You haven't seen any indicators coming on the chart yet to take trades and things like that. We will get to a section where I will teach you about how you can use certain indicators, but we're just keeping it very, very simple. Okay, so price has a huge drop. Right here, it has a pullback before it does. So that's a really obvious area to me. That just really stands out. It's like, whoa, price came down, wicked away, and then next thing it did is just break and drop. So I want to be here for a potential retest. Okay, right here, price finds its bottom. So you can easily map in the swing low right there once it starts to push higher. And then once it pushes higher, you can take the top of this level and look for a potential break and retest opportunity, and then stretch it out even further. Boom, potential trading opportunity right here. So then we've got the top of this level, which was a potential break and retest right here. Runs through. Now price drops, comes back. It does retest this level. It doesn't have a dramatic move away, but it does have a little bit of a move away. As soon as it hits this level, though, it blows right through, comes back, and look what happens right here. So it'll take you, a minute to try to really wrap your mind around just getting the clean levels. But honestly, err on the side of caution, okay? Err on the side of, I'm not going to plot a level in unless it looks super clean, unless it is just like fresh out the car wash, and you can see the points that price is touching, okay? And then you'll get better and better and better at it. You'll see my charts, you'll see where I'm plotting the levels, you'll see what I'm waiting for and things like that. And then, slowly over time, you'll do the exact same thing to where you're plotting in your levels over and over and over again. So right here, okay, when price was just right there, and that's all we were seeing, well, then that could be a level that we plotted in at the time, okay? And then we could also plot in the top here. And now price is going through this consolidation phase right here. And we could also, this right here, remember, is a whole area right here. So price came down, retested, consolidating before a move. Boom, there's the move. Then we could be waiting for a potential retest. right here. Price drops through. Okay, we're not really going to put a lot of stock in this level right here, so instead we're going to move it up to the high. Then what happens? Price pulls back, tests this level, doesn't break through, comes down, trading opportunity there, comes up, trade right here, creates this level, and it hesitates right here, pops up, actually tests this level, price breaks through, comes back, tests this level, comes down. Right here, there's a little hesitation before price breaks through. Retest, move away, breaks through. Okay, another trading opportunity up here on this level. So we've got this level running through. Boom, price tests it twice before a dramatic move away and just walks up from there. And just as you can see, it's just the same thing over and over and over again. And that's what we want it to be. We want it to be replicatable. We want it to be something that's very predictable, that we're just getting into the habit of doing over and over and over again. Okay, price has this level right here. Move off, a little bit of a bounce, consolidation, breaks up. Then this level right here, again, it doesn't have to be perfect. It doesn't have to be, exactly a little thin line running through. It's an area, so we're going to put a little bit of weight on the area, and then if it continues to come down and bounce around or break through and retest, then that'll give us a better indication about, hey, the area is shaping up to be like this, or hey, we can thin the area down or widen it up a little bit or things like that. You don't want to make your areas too thin, because then what can happen is, price will come down and maybe you won't be taking into consideration a little bit of wick and things like that, and you won't have the opportunity to get in a trade. Now, you don't have to take the whole wick into consideration like that, because that's a pretty big key area, and you want to define your key areas. You don't want like a freaking key area that's huge or something like that. You want to make it reasonable, just reasonable. Something like, something like this, something like this, something like this, just somewhere in between. Okay, there's not a very specific to the pip type thing that we need to be doing here. It's just a general thing. The principle is price going to come back here to find support before it lifts off again? Okay, is it going to come back here, and is this area going to act as a trampoline to send price up or send price down? That's what we're after. Okay, so potential trading opportunity here. And then it looks like we had a break, a little bit of a retest and a move away. Price fell through, coming to this area, broke back up, retested, boom, off to the races. Okay, that can be an area right there. And that's what I want to mark up right now, okay? That's what I feel comfortable marking up. That's what's obvious to me. Nothing else is super duper obvious to me right now, or sticks out. And if it's not obvious to you, move on to another pair. Sit it out. Don't plot in levels that, you're just like, well, I think this level makes sense or something like that. Just, it's absolutely not worth it, and I don't want you to get into the habit of doing that. So right here, we had this area right here, pretty good move away, comes back up, retests, boom, shoots away, drops through. Then we're looking for a potential retest. Instead, it finds support right here, breaks through, then it retests this area. So with this one, something that we could have done is that when it fell through and then it retested, okay, and then it came down here, then it broke back above. Well, we're going to be dropping down for validation. I mean, I was going to say that, we can wait for a test and move away and then another test, and then we can get on that one. But the truth is that when we're dropping down for validation, and actually neither one of these would have actually been a trade, but let me just show you, let me just give you a sneak peek real quick here. Let's go to this one and see if we've got a validated trade. So right here, we've got trade validation. So I just want to reinforce the fact that we're not buying off touches, okay? We are validating these trades. We're really running price, we're running price through basically a system so that we can have the highest probability of actually getting trades that work out in our favor. You're going to have losses, you're going to have wins, you're going to have strings of losses, strings of wins, you're going to have break evens, you're going to have partials. You're going to have full take profits. You're going to have big winners, little winners. You're going to have every single thing. You're going to have some of them, okay? And that's how trading works. And the reason why most people can't handle losses is because they haven't gotten far enough in creating consistency and profitability to where those losses are no longer, oh shit, I lost the trade. Oh God, I can't believe that I've got a string of losers. I just had, 2-3 losers. Once you get far enough into the process and become comfortable enough with your strategy, then you realize, oh, that's just part of the game. Yeah, that's absolutely just part of the game. A big winner, a small loss. 2 losses here, 3 wins there, 3 losses there, 1 partial, 2 losses, 1 huge winner. That is how trading works, okay? So we got to enjoy the journey along the way, but you will learn as we get further and further and further, and as you get further in your own trading, that losses are not something that have to be this big emotional upset type of thing. You go back, you review your losses, you see what happened, you make sure that everything was correct on your side, what you can adjust, what you can tweak. There's a process for looking at the trades that you have taken, okay, and keeping record and stock of those. And then you start to understand, okay, great. So here's a loss, awesome. Here's a win, here's a big win, here's 2 losses, and it all evens out over time. And so no longer do losses have to be this big scary thing. They can just be accepted as part of the journey, okay? So this covers it for these key areas. Now, let's talk about order blocks, okay? And again, it really is this simple. It is just this simple. All we're doing is just plotting our low, plotting our high, and we're just looking for areas where prices come retested, prices come to how to move away. It's that easy, and you're just going to do this over and over and over again, and you will get better and better and better at this. And again, if you show up to a chart and things look confusing, just get away. Just get away from the chart. Just come back at another time, find another pair. If it doesn't look obvious to you, then you should not be trading that pair. But if you can see right here, I mean, this is the span of, 2.5 days, and we've got 1, 2, 3, 4, 5 potential trading opportunities. And let's be honest, I mean, there's much more. Price had already made these moves, and so if we were in real time, we probably would have plotted out this area and had a potential trade. I didn't even put a potential trade there. So you can see that there's more than enough trading opportunities. You don't need to take every trade. You don't need to force the market's hand or anything like that. So let's just quickly look at order blocks. So we're going to go over to the 10-minute chart for this, and actually, I think probably the best example is going over to this recent trade. So right here, this is an area of support, resistance, and price came up, and there was a trade right here, okay? I dropped down. We'll go over this trade in one of the lessons. And then off the back of this trade, a 10-minute order block was left right here. And all we're looking for is a buy, in this case, a green candle, before a sell off, okay, a sell move. So we're not looking for, 1 or 2 candles. We're looking for a move away, okay? There's not a certain number of candles that it has to be. There's not a certain number of pips that it has to go, but there needs to be contrast to where you look at this area and then you see the sell off and you're like, oh, okay, wow, I could really see that green candle is left there. That's our order block, okay? That's our 10-minute order block. And then, we're not going to go and we're not going to validate these right now. That'll be in another section. Right now, we're just looking for the order block. So this is an order block. Let's see if we can find an opposite one. Okay, so now we have a 10-minute sell order block right here. So we've got a sell before a buy. Okay, so that's something that we could look at as a potential trading opportunity. Let's see. Just kind of go back here and hunt around for a moment. And keep in mind that, see the price action that we're working with here? We're not going, 6 months back in time. We're not going 3 months back in time. We are literally working with current price. I mean, price is right here. This trade was put on this morning. This trade was put on 2 days ago. Same with this one. This is current price. There's no need to cherry pick this shit because it happens over and over and over again. This is literally how the market moves. Consolidation, find support, resistance, move. Consolidate, find support, resistance, move. It's just over and over and over again. So let's see here. Okay, got one right here. They're going to be fairly obvious and they're going to really stand out to you. So see how price had a sell before a very nice, I mean, this is a really, really nice dramatic move away. So it's very easy to see that with your eye. And then price comes back to it and that's your block. I'm seeing another dramatic move away right here. What you can kind of look for is just the dramatic moves away. Okay, right there, price comes back. Let's see if we can find some on the top here. Well, I can find another one on the bottom right here. Dramatic move away. Let's see. We've got a buy right here. Dramatic move away. So this is how we're going to be finding our order block levels, just over and over and over again. Right here we've got a buy, dramatic move away. Let's see if there's any in current time. I'm not sure if I would map this one in. It does have a dramatic move away. Yeah, I would map that one in. I just want to make sure that red candle doesn't come down and actually touch it, and it doesn't. Okay, so there we go. Dramatic move away. Right here. This is a nice clean one. And when I say clean, I'm just saying that it's very, very easy to see. You can see the sell and just boom, price just jets away. Okay, and keep in mind with this, we're validating this order block before we get into the trade, okay? So we're not buying on a touch when price comes here. We're looking for confirmation. Confirmation is absolutely necessary before we get into a trade. Let's see. Got this area here. And oftentimes we can take into account the wick before or after, if there's just a wick sitting right around our order block, it's oftentimes good to take that into account. Okay, so I'm sure that I'm missing a ton of order blocks as we're going through this right now. But this is one right here. Okay, we got to buy before a nice move away. Right here, we've got to buy before a nice move away. Buy before a nice move away. See how simple this is? We're just doing the same thing over and over and over again. We don't need to be these, scholars of the charts and all this stuff. All we need to do is become a master at just a few different things, just identifying your key area, dropping down for validation, and then managing the trade, which you will learn. Okay, I think that this wraps up the key area section. Now you know how to plot in your key areas. You know that you can, we'll just go right here. You can grab your low. You can grab your high, and then you can plot in the absolute most obvious levels to you. So the obvious level, one of them that's sticking out to me, is right around there. Okay, price breaks, retest, breaks, retest, comes up, shoots through. I want to know what's up when price gets back here. And then I'm watching this level, then I'm watching this level, and I'm also watching this level, boom, right here, boom, drops through break. And so that's it. And I'm not doing anything until price gets to those levels. So go to your own charts, start plotting in some levels, and only plot the most obvious levels in. And some pairs, you're going to get there and you're going to be like, what the hell? This thing's all over the place. I don't know where anything is. I can only plot the high and only plot the low. Then only plot the high and only plot the low. Move on to your next pair, and then you will eventually start to see, okay, consolidation. Okay, got a level right here. Where's the top of the consolidation? Okay, that's right there. Okay, so potential break and retest I'm waiting for. Okay, and you'll start to piece things together, but let's not make it complicated. Let's keep it simple.